Hello and welcome to today's video. In today's video, I'm going to show you one of my recent trades where I made $200 in just 24 hours. That means I opened the trade on one day and the very next day I actually was able to close the trade and I made a profit of $200. So we'll go into all the details, the rationale behind the trade, how I selected the stock and how I selected basically the trade, what was the actual trade, and the result I've already showed you that I made $200 within a single day. So let's proceed. This is what I just mentioned. This is all that we'll be covering today. A quick disclaimer that none of the information that I'm giving you is any kind of trading or investment advice. If you plan to trade or invest with your money, please get in touch with a certified financial advisor and understand the risks in investing and trading before you do that. So this is the actual trade, and as you can see here, this is a screenshot from the community uh, tab of my YouTube channel. So I post the trades that I take on the community tab of my YouTube channel, so you can actually subscribe to my channel and enable the notifications. So as soon as I post a trade and I create a post on the community tab, you will get an email, you will get notified, and you can follow these trades. So the trade here was on the symbol RH, which is basically Restoration Hardware, and this company. The trade that I took, as if you've been following my channel, you would know that most of the trades that I take involve selling option premium. And in this case also, the trade that I had taken was to sell the $200 puts. That means I collected premium by selling the $200 put options on Restoration Hardware. So if the stock price went below $200, these puts would have been assigned to me, and I would have actually had to buy shares of Restoration Hardware at a price of $200 per share. So now let's get into the rationale as to why I took this trade, what was the criteria, and basically what was the analysis that I had done before getting into this trade. So let's head over to the Finviz platform because I want you to see the chart also as well, and I want you to see some of the financial details as well regarding the company, which will make it clear as to how I went about taking the decision that I should be taking this particular trade. So this is the Finviz platform. For those of you who are not familiar with this platform, this is a stock screener, and I have a lot of videos. I have a complete playlist around Finviz. So I'll leave a link to it in the description. You can watch that to get some basic tutorials and to see my other videos around the different stock screeners based on Finviz. But for now, let's get started with understanding the trade. So this is the Restoration Hardware chart, and I'll basically go to the weekly chart. So what I wanted to show is, if you look at this particular company, right, and if you look at the chart, it has had highs of around $700. So this company went up in price and then it traded around $700 for a fairly long period of time. So this is a weekly chart, so you can see there are multiple months during which the stock basically traded in the $700 range, and then the stock price started declining. So the first thing is, when you see this kind of an upward move or an upward trend in a stock, it just doesn't happen without a reason, because this is a weekly chart, so this is a multi-month growth which is happening there. And I was basically calculating the intrinsic value of the stock all the time. So the valuation of the stock was improving, but initially during this upward trend the stock was very expensive. Now what happened, it started consolidating around the 700 range, and the price fell down all the way down. Now you can see it's trading around $305 today, but when I took the trade, the stock was trading somewhere around I think 270 or $280, so it was even below this, and I sold the 200 puts on this. So what's the first logic? If you've not seen my other videos, I'm going to leave a link in the description, but I have videos which basically teach these concepts or explain these concepts in much more detail. But one of the concepts that I explain in my other videos is never to buy high. You have to buy at lows and sell at highs. I got into a trade when this stock was trading at around 270, into a trade into this particular stock at a price point which is at a 60% discount from the last 52-week high. So that's the first level of protection, that I am not buying at the highs. The second thing is that I did not sell the 280 puts. I did not sell the 250 puts, rather I sold the 200 puts. So what does that mean? 200 puts, selling 200 puts basically means that I will have to buy shares of Restoration Hardware only if the price goes below 200. That means my purchase price is going to be $200. So when I took the trade, although RH was trading at 280, but because I used put options, I did not outrightly buy the shares at 280, $270, whatever price the stock was trading. I sold these put options. So I'm basically fixing my buy price to be at $200. So this is a second layer of protection or cushion that I'm giving myself, that if I eventually end up buying shares, my buy price is going to be $200. Now, if you compare this $200 buy price to the recent high, which is $700, this is basically a $500 reduction. So that's the second layer of cushion that I gave myself. The third layer of cushion is the premium that I collected. So if you've seen the trade, I also collected $500 of premium. That means although I would buy shares theoretically at a price of $200 per share, but since I've already received $5 per share of premium, my effective buy price is going to be $195. So I'm further reducing my cost basis by 2.5%. So I'm not buying at 700. I am not buying at 270, 280 levels where the stock was trading when I took the trade. I am planning to buy at 200, and that too I'm reducing the cost basis by $5 because of the premium that I have collected. So you can see here that systematically I have basically created multiple layers of cushion for myself so that I eventually end up with a trade which is on the profitable side for me. Another thing that I want to say is this is all about technical analysis, okay? Because here I've just talked about the price levels, and I have talked about the advancing price initially and then the declining price. But an important thing to understand is that I know how to calculate the intrinsic value of a stock, and then I add my own margin of safety there. So for me, this particular company was a buy at any price about below about 270 $280. So if this stock is actually trading below this price point, in my calculations, intrinsic value calculations, fundamentally the stock was undervalued then, and I would have been comfortable buying shares of this company. But because we were in a pretty bearish market, so the valuation that I had done was done before we had entered this bearish market. So because we entered a bearish market, I added another $80 cushion there. So although my intrinsic value for this company was around 270 $280, but I was comfortable buying shares only at $200 because I felt that although my intrinsic value calculation says that the company that I can buy shares at $280, but because we are in a bearish environment, because there is a lot of volatility in the market, chances are that the prices may go even down further. And I don't like to see a loss on my books for even a small period like 3 or 6 months, because it discourages you, it basically demotivates you, and it puts a lot of doubt in your mind for the next trades that you're trying to take. So imagine the situation now that I took the trade, I made money, and it's been a profitable trade for me. Even if my intrinsic value calculation was correct, let's say I would have bought shares at 280, right? So at even at $280, right now the stock is trading at 304, so I would have made a profit. But I can assure you, if you look at the price for the last few days, you will notice that this particular stock made a low below $280. In fact, I can tell you the exact figure. So it's $236. So if I had bought shares at $280, the stock actually went all the way down till $236. So for a couple of days, which is applicable in this case, it could have easily been a couple of weeks as well. But for this example, at least for a couple of days, I would have seen a 50 or $60 loss per share on my account, and that is something which I don't want to see losses in your account even for a small period, and you see that in too many trades, that can actually discourage you, demotivate you, and it can force you to start doubting your analysis. So I don't want to get into that mindset, and keeping that in mind, I basically took a much safer trade, which was to sell the 200 puts. And the reasoning behind that was that if I'm comfortable buying shares at 280, if eventually I have to buy shares at 200, then even if the price goes to 150, I'm fine holding that loss for some time, because I know this is super undervalued. I'm not just buying something which is at intrinsic value. I'm not even buying it at a undervalued price. I'm buying it at a super undervalued price. So with that concept in mind, I sold the 200 puts, and eventually the very next day, when I sold the 200 puts, I collected $500 in premium, and the very next day I could see that the premiums had evaporated by $200, and I could buy back the same options for $300. So I did not wait to capture the rest of the $300. Again, the reason was very simple, because whatever max gains I was supposed to make, if within one day I can make 40% of those gains, then it is better to capture those gains and look for other opportunities. So with that concept, I basically closed the position the very next day, and I collected a net premium of $200. So this is how I made $200 within a single day. So here we are back to the details of the trade, and what you can see here is that the trade was actually open for 24 hours. So I've put the number of days the trade was open as 2, because the way I calculate this is I took the trade on one day and it continued till the next day. So 2 dates are involved. So that is why I'm telling you that the trade was open for 2 days. But ideally, if you see, I took trade yesterday and I closed it today. So that basically means the trade was open for only 24 hours. So if you take the actual annualized return here, it is around 360%, right? So that kind of return is not very common. Okay, if you look at index funds and most of the hedge funds, they target basically about 8 to 10% return in a year. I am talking about trades which are giving you 360% return in a year. And you can go through all of the trades that are available on my community tab of my channel for free, and you will see that the returns on each of those trades, I think almost all of the trades are more than these average index returns of 8 to 10%. So, and some of the trades have very high returns like this one, where the annualized return is about 360% or even 400%. So, what's next? Where do we go from here? Uh, if you are interested in trades like these, if you want to follow my trades, I am putting these trades for free on the community tab, as I've mentioned multiple times. And what happens is I take the trade, and within a few minutes, I just post the details of the trade in the format that you just saw on my YouTube channel. Both when I open the trade and both when I close the trade, I put the update there. And all you have to do is subscribe to the channel and enable the notifications, so that next time whenever I make a post, I create a post to give the trade details and the trade is posted onto the community tab, you will basically receive a notification, and then you can go and review the trade and you can follow the trade that I have just taken. So if you would want to do that, please subscribe to the channel and make sure you are enabling the notifications. So hopefully this video was useful and you will be motivated to understand that I am also a retail investor. I do not have any of the advantages of huge capital and a huge team to do the research like most of the hedge funds and professional money has. And if I can make these kind of returns, you can also follow my trades and learn how I am basically trading. And if you have any comments or suggestions, please leave them down in the comment section. I'll definitely respond to you. And if you like this video, please share it with your family and friends. If you've not subscribed already, please subscribe to the channel and enable the notifications, so that you can take complete advantage of these free trades that I'm making available on my YouTube channel. Because you can go and Google and search for these kind of information, where somebody who is actually making profitable trades gives you their trades, and these most people will have this as a paid service. So I'm giving out these trades for free for now. All you have to do is subscribe to the channel and enable the notifications. So hopefully this will be useful and it will help with your trading and you would like to follow my journey. So I'll catch you guys in the next video. Thank you for your time.